The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour, this 15th day of December. Woohoo! Almost the end. Got to start getting used to 2015. Well, thank you for those 3 hours, John and Steve. Great 3 hours. Let's just go straight to the market. We got programming all the way through the day here, and we're looking at a Dow that what I'd said to subscribers, I started sending out charts Friday night, I think it was. Most importantly, for my subscribers to my opening call, most importantly, I was pointing out that in my work, we had gone short the Dow just almost at the exact top. We had a full position. We've got a half position left. We added to the short side this morning. We actually tried a long in an instrument that has just been cascading for months. Got taken out, and I'm real close to maybe even attempting it again. I think it is ready for a bounce, but that's not the point. The point is that as far as the charts are concerned, the E-mini that I'm showing here, I always show this before I do anything else in my show. So the left side here is the daily chart of the whatever future contract is current. In this case, it's the March E-mini, S&P E-mini, trading at 1991 up 1. And this is the 120-minute chart. You can see in the 120-minute chart, I've drawn in a down channel. We made a peak G, a kind of a right arm extension at 2071.75, and started coming down, broke that rectangle formation support, broke the 200 period moving average support, just kept plummeting down to the 1987.75 level. We are just a little bit above that at this particular point, so there's a critical couple of hours coming up. Now, I had also spoken about the weekly charts, and I said that by every measure, I should be calling this A. But I've made a real big deal about a particular chart pattern in the stochastic that applied to the period of July, I believe it was August of 2007, came down sharply, and then the market went up to chagrin of all the bears. It just went up and up, and I said, until I get this weekly sell signal, I can't believe it's happening, but I have to wait for it, and eventually we got that sell signal. And what happened is that the price came down very sharply, and when it came down, the stochastic, as you can see right here, let me just do this to make it easy, because I know many of you use the SPY, the diamonds, and the Qs rather than the futures contracts. Without going into the notation, although there was a doji peak D at 208.47 in the SPY and the daily chart, let me just show you exactly what I'm looking at here. Because I'd identified, this is a technique I developed many, many years ago, decades, that had within an up channel, it doesn't always have to be an up channel. What I do is identify where the price of most resistance is, and I call it an inside, Chapman wave inside track. It becomes a repellent reversal zone at the top. I sometimes call it a sell zone. In my CD introducing the Chapman wave methodology, I call it a sell zone, a repellent sell zone. But you don't even have to sell. It depends on what happens there. But that is the area that most often there's a reversal. And on the upside, you get the same sort of thing. Well, now what we're doing is we've reversed in the lower inside track, that dashed line there in the E-mini. I've got this as an A because I've tried 1,000 ways. There's no other way I can count this. It is a G, and after G, you don't get H, you get an A. And that said to me that under the worst circumstances, if correct, there should not be a break of 181.92, the October 15th low in the S&P or the SPY. and that we could come all the way back to test the up channel support, which is what we're doing this very second, and that I will have to make decisions if we were to crack the 196, 195 key support level. Are we going all the way back down, or is there still a major bull market in the weekly chart? So let's just leave this for the moment, other than to say, what I told my subscribers is that the daily had gone to a sell signal and sell mode in almost all the indices, key indices, number one. Number two, the weekly charts had just given sell signals, but a sell mode is really, because once you get to a sell mode in the weekly chart, now you can start for the very first time looking at monthlies. And the monthly says a close under 196 will be the first close under the 9-period exponential moving average since the breakout of June of 2012. So I've decided, even though I've done a lot of work, remember we had that call from Ernie, I can't remember if it was Ernie. We had a call, I could find it here, but we had a call, very prescient call about a downturn. We still went a little higher, but essentially said that there is, and I drew it in one of my charts here, I drew in that there was the chance that you would also be looking at a declining trend line. And that declining trend line would say, and this particular person, oh, I remember it was the monthly chart, and I drew it in. Here it is. Let's go to this right here. Monthly chart, and it wasn't this one. It was another one. Am I going to find it now? Yep, there it is. Nope, that's not the one. All right, I will try to find it somewhere. And I drew in the trend line on the monthly chart that said, he said that we're going all the way back down to under 6,600. And I said, yeah, I don't see that yet. I'm not going to be able to find it while I'm talking here. So I'm not going to even try if I don't get it in the next few seconds. No, okay. So I can't find, I will try to find it during the break. But it had a trend line in the monthly chart going all the way down to, I'll find it right here. And that would have said that, as this is INDU, that would have said over there that there was a trend line that goes all the way down and certainly could take you down to the 14,000, even the 12,000 level if that trend line was hit. Why? Because it was an expanding wedge. Not a contracting, but an expanding wedge. I don't mind having that in the back of my mind, but it's really useless information when you haven't even got a signal yet in the monthly chart, let alone talk about lower levels of, you know, what are we talking about there? 17, yeah, 20% or more. So I don't even want to get there. I just want to say we're going step by step. My first step was, for my subscribers, they know I had this typed in. 70,278 was the candle low of the 4th of November. And I had said that if we continue, we break 17,470, I think it was, there's a good chance that we're going to go there. Where are we now? We're at 17,222. The Dow is down 57. The S&P is down 6 at 1995. The comp index, if I can just find it right here, the comp index is down 28 at 4,625. Now, I'm finding this very interesting. The IWM is down at this particular point. It's breaking the support. Remember, I drew in the cup formation, this double cup formation, and what I said very clearly was that the 118 to 119 should be very strong resistance on the third attempt, and that if we break down, or invariably we reverse at that particular point in this H pattern. Why? Because in the Chapman methodology, this is just upside down of the lowercase h that becomes a lowercase m, and then you break to a new, if you break to a new high or low in the case of the m's, the bar that takes out that low needs to go right backwards, exactly what we're doing here. And now we're looking at the 113.18 level as being the IWM, the Russell 2000 iShare ETF, trading 113.74. That would be the next target. MACD's bad, stochastic's bad. That's the daily. And the weekly chart is only now saying it's under the 9-period exponential moving average for the second time since it broke out above it back in the week of October the 31st. This is that pattern that I keep looking at. We'll see where this goes to. And the monthly chart is making a very interesting pattern. If there's a close below 110 in the next week, that's just going to be really ugly. So now let's move on. So you've got gold, GCG15, trading down 8 points at 12.14. Now, what's really interesting about this is that we're long, my subscribers and I are long. We're long in the ETF, and what's important about it is that it's held okay, but it really hasn't shown tremendous signs of strength yet. And I didn't want to go to the gold stocks at this particular point. I wanted to just stick with the gold contract. The gold contract in the 120-minute chart has just bounced perfectly off the 120-minute chart. That's been great support. Let's see where that goes. Let's also see whether the gold itself is going to start to become a medium of a currency of fear. If it is, then gold will go quite a bit higher, and that'll coincide with the dollar, which is now up 17 cents, making a U-shaped formation, trying its best to find support. I got a feeling, I've called this a sideways to down consolidation from the peak G, and you've got the Chapman wave stork leg formation. There's the leg, there's the body, there's the neck, there's the head, there's the beak. If the beak takes out, in the dollar, takes out 87.91 was the low of the 11th of December, not good enough. If it takes out the low of 87.52, that's an important low, but especially the 87.18 low of the 17th of November, gold will finally find a price objective 30 to 50 points higher. We'll see what happens in the meantime. Meantime, they're both just going sideways, nothing very special happening there, but it does show me that gold is kind of vulnerable. I'm going to go to the VIX index for my subscribers. So I was sending out all these charts over the weekend, sent out last night the VIX index, and what I explained was that this is very different to other times, that in fact is being bought more as insurance. That's why it hasn't come down. Even this morning when the Dow was up 100 and something points, S&P was up huge. The VIX index was holding beautifully. I was hoping that it would pull back to a certain level so that we could go back to the long side. We just missed it by a few cents. It would have been nice to have had it in and got it just for this particular set of failure patterns. Doesn't matter. There's going to be time. Look at the weekly chart. Remember that 21 area that I said was so important? We spiked above it to 31.06 on the week of the 14th of October, plunged to the downside, and now we're up again. I'll talk about it when we get back. I think we've covered a chunk of things. I do want to show the 120-minute chart with an on-balance volume for a request.
It's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Check out the new look of Tiger TV. Now you can see all hosts, charts, and computer screens live in high definition. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV. Now, crystal clear in high definition, 24 hours a day, 7 days a week. If you haven't seen the new look of Tiger TV, then visit TFNN.com. Basil takes your phone calls. Now, toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks, we're back. So let me just say that the VIX index, I've made a big deal about it for as long as I've been here at TFNN. I always talk about the VIX. And the thing that I've been looking at mostly is that the speed with which it broke out Thursday and Friday, but into the 20 and then 21 level, and then higher. And now we have a high of 24.34. Makes this really important because the issue is that every time it's gone above the 200-period moving average, the VIX index is the volatility index. I call it buying and selling pressure. Every time it's gone above that level, it's no more than, if it isn't the very next week, it's the week after, that there's been a plunge to the bottom. This is very different. Something's going on here, and I'll explain a bunch of things together with the VIX. But first, let me do one thing. It was a request, and I'll get to it right now. We could request on the E-mini 120-minute chart, how about, and the on-balance volume, how about I do the QQQ to show you what I'm looking at. See this blue line right here, blue, 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 blue? When it made its high right there, that was the exact top of the QQQ 120-minute chart at 106.25. Happens to have been a PKF top in the daily as well. However, there was a pullback and then another A, B, C, D to the upside in the Chapman wave, with the MACD failing, the stochastic failing, and then what happens? You get this double top in the unbalanced volume, and then you're ready for the very sharp move to the downside. So how you use it is a very special tool. It's not easy to use until you get very, very used to the times that it gives you a signal, but it isn't the signal. It isn't the major one to turn down. So look how nicely it's worked here. And now it's going towards the bottom. So that's going to be very important to monitor. Now, let me do a couple of things here. When I'm looking at the QQQ series, the 101.40 level is the 200-period exponential moving average support in the daily, in the 120-minute chart, of course. That's what I meant. But what's very important is that the support is being broken right now as we speak. And what I sent over the weekend was that the MACD and stochastic in the daily and weekly charts were turning down quite sharply, especially the daily. How it impacts the monthly, we will only know at the end of the month. That's when we need to look at it, the last day, the last minute of the month, of the year. Closes it out, and that's what we want to look at. As it stands right now, and this is the thing that I've been wondering why people have been wanting to be long right here, the market, simply for two reasons. One is that volatility index has really been active for the first time, and it's telling us that there's selling pressure. But the other is this, and I'll go to our calls right now. I didn't see that there were calls, I'm sorry. But the most important thing is this. Look, the two very important sectors that I've been following, which we have shorted before. We aren't short them both at this particular point, short one of them. But the IBB, which has just been absolutely on a tear, hit 316.18 leg D, and is plunging right now with the MACD and stochastic. But it is F/B in the weekly chart, G/C in the monthly. It's saying, letter-wise, we aren't 100% sure, is this the top? What is it? It's going to be the daily. So what you do is you set up your positions, and then in case there are, if it turns out that you're still holding the positions, and it goes from the daily sell signal to sell mode right at this very moment, I would have to say it's gone immediately from a sell signal to a sell mode, but the day's young. I'm not going to wait until 4 o'clock to confirm that. But the weekly chart hasn't even given a sell signal yet. So isn't it nice that you get into position and you don't say, oh my God, this is going to that trend line right there. There's that up channel, and you get everybody excited and you say, oh man, that's fantastic. No. It could stop anywhere and turn that level into support, and then you're looking stupid because you were saying it's going down to 260 when you didn't have the evidence. You had the inkling, but not the evidence. I don't have the evidence right now. Back in my mind, I'm saying, hey, that 9-period moving average of 274 looks enticing in the monthly, but we'll go step by step. Semiconductors as well. Semiconductors is just now testing the left side, right side time price match with an inverted V, gone from the body to the neck to the head. This is the beak. And right now we're looking at 53.76 down 44. 53.29 is the key support. Let's go to Mark in Denver. Mark, hi. Sorry to hold you wanted to look at? Mark, you there? All right, we'll be back straight off the test. Hopefully. That's down 100.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Each and every time that the dollar ticks higher, S&P wants higher price. Each and every time that the dollar's ticking lower, guess what? S&P wants lower price. Dollar, the metals, and the S&P are going tick for tick.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks. We're back, and we're back with... Hi, Mark. Are you there?
Yeah, I'm here. How are you?
I'm good. How are you? Your question is...
So, here's a semi-critical question.
Yes.
So, we are attempting, or have been attempting to go long oil.
Yep.
Correct?
Yes.
And we also are short the market.
Yes.
We're trying to be. So it seems to me that the oil is leading the market lower. So my question is why play opposite sides of that?
That is an outstanding question, and the answer to that is the crude oil made a high, double top high, on the June of this year, June the 27th, the week of June the 27th. The original high was the week of August the 30th of 2013. I have been considering that crude oil is a really very important component and is telling us, together with high-grade copper, that there is tremendous weakness around the world. But as a purely technical play, it seemed to me that there was a good chance that crude oil, I still think that, crude oil is within just a couple of days, if not a couple of points, of having a rally that would be the first rally and probably won't turn out to be a V-shaped rally. It'll be an arch formation rally, with the real test coming with the test of whatever the low is, if it is a low, in the next couple of days. At the same time, I'm treating it as if I must keep it separate from the stock market because it led by so many months, in fact, a year, over a year, if you want to go to that exact high, so that I have to try to keep them separate in my mind on a purely technical basis. So that's the only reason. It was really just a purely technical thing. The other is I did show the chart the other day. I don't know if I've got it here. Probably don't have it. Of the short side. Let me just see if I've got it here. SCO. Yeah, SCO. And that is in leg. I've got this as leg F. Maybe it's recycled. I'm not sure. But all the technicals are suggesting while they are extremely strong, there is a chance that we are real close to some kind of a pullback, although today's candle, I must say, is a nice candle. No question about it. But we're looking at it as being, the technicals are suggesting that there could be a pretty nice percentage play, and that's already all I've been trying to do. I'm not prepared to use up all my percentage play if I'm wrong. So I'm going to have to wait for a really, I'm going to have to be able to justify it on a technical basis a lot better than obviously it was this morning. So that's why I was saying earlier that we did try to go long, something that has been in a major waterfall cascade down mode, a crash basically, mainly for a percentage gain. I might just decide, you know what, I don't care whether it goes up, whatever it goes up, I'm not going to be looking at it again because it is, and I mentioned in my newsletter that it is a high risk because we haven't even formed a base yet on the downside. But I just wanted to say that on a purely technical basis, my 120-minute chart showed that the SCO, which is the ProShares Ultra Short Bloomberg crude oil, is getting. I'm dying to see what if Larry's going to be putting in a chart of crude oil into his show today, because I'd like to see what it does in terms of Gartley's. In this case, looks to me like it could be more like a butterfly. But in back at the ranch, I want to try to put this together now. Natural gas really hasn't had the same downside momentum, but it's been in a down mode. And I had a question from Trung about natural gas. I'll just add it here because this is kind of the pattern I was looking for, something off the bottom that just has a 5-6 sessions and makes a percentage gain, but it's not one of those wild V-shaped spirals to the upside. UNG has just made a leg D, maybe a peak E in the 120-minute chart. It's really not showing very much of anything right now. So, yeah, good reason to bring it up and ask me about it. And the answer is, I thought on a purely technical basis I was very close. Seemed to me I probably should even have made the stop tighter than I did. Because if it was going to work, as we're speaking right now, crude oil shouldn't be at 56.50 on the continuous contract, down $1.31. It really should be above Friday's candle of 59.57. So you could have, would have, should have, but the reality is it was a very poor trade, and I should probably have waited for a bounce and then bought the trend as it was showing to be up. So now the answer to your question is, if I look at the monthly charts, because I've been talking about this week, using the monthly as an example, what I had said was that the weekly chart needed to make a doji candle. That was not last week, but the week before, and last week was supposed to move higher, and it didn't. Instead, it continued to move to the downside. And what I'd also discussed last week, that there's a chance that in the weekly chart, the doji candle of the week of the 21st of November could be to the doji candle of the week of the 5th of December, could be give you a 1-to-1 to the downside, and that made the 56s, maybe 55s, a really important area in crude oil on the continuous contract. So maybe we've still got some way to go. Now, what's really important is you'll see that the crude oil has failed and the market has failed. So we're really looking at crude oil at this particular point still, whether it's the tail wagging the dog or the dog wagging the tail, it doesn't matter. They are in lockstep. The crude oil is down 1.2 2.4%, and the markets are down about 8.5 or 9.9%. So they're moving together, and because crude oil at this particular level has bigger percentage moves because it's in a waterfall cascade. That's the reason. So I have no excuse. I tried it, didn't work, but you got a very good point. Why bother when my discussions have been talking about a sell signal to sell mode with the weekly chart showing as well that it's starting a downward move in almost all the sectors now. So, Mark, good point. I get the point. And
no, I wasn't trying to. I was just trying to. I guess my question more is also: do you feel like if there is a bounce in crude, it'll kind of form an H pattern with the market?
Yes, that's exactly right. And I was trying to anticipate that crude oil would lead us in a bounce. We might have got that bounce, 100 and something points in the Dow. What was it? It was 18 or more points in the S&P. That could have been it. And when you're in this kind of sell mode, rallies are for shorting, and which is one of the reasons why we grabbed a short position back again today on the bounce. I mean, we're very lucky to be able to get that kind of price movement, and now that one's up very sharply. So, yeah, I think that good points. And I thought about just exactly kind of the question that you asked. I asked myself, and I thought, you know what? The 120-minute chart is really giving some nice indications, but when there is international selling pressure of anything, you're not talking you or I or the financial institutions here. You're talking about governments. And it's like the dollar. When the dollar was moving up, it hardly breathed on the downside before moving to a higher high because governments were behind it. And that's now, I think, we are looking at this as crude oil is in the same situation. It isn't just small money. There's big money out there that's involved in either selling crude oil or just not being buyers.
Okay.
So I hope that kind of answers your question.
Yeah, thanks. Everything's been wonderful. We had a question on that. Everything's been working really well. This is the only one that I kind of questioned in my own mind. I just wanted to talk.
Well, you had every reason to question it, and I did have a question for it. I thought it was a good chance, but it was a mistake. You don't want to. I always, that chart that I've shown periodically from my CD where I have the price moving up, and I've got that big arrow down.
Yeah.
And on the way down, it's got the arrow moving up. And the question is this the way to trade? Well, if you're a real good short-term trader, maybe. But if you're looking for the tide, when you throw a piece of driftwood out and the tide is going out, that driftwood will not come to shore. When the tide is coming in, when you throw the driftwood out, it will not go further out. It'll constantly be pushed up against the shore. I try to play a trend wrong.
Okay,
sorry about that. Hey, thanks, right. Mark. Always appreciate your calls, and thank you for calling. Let's go to Rob in Paramus. Hi, Rob. How are you?
Hey, Basil. How are you doing?
I'm well, thank you.
I have your newsletter, and I never would have gone short without your advice.
Well, that's good. Thank you. It's a very interesting thing. That I was looking for it. And then the market went sideways, and that sideways action can be very confusing if you're on the edge of being a bull or a bear. But because, thank God, I used my Chapman wave notation, without those letters, I would not have been able to pull the trigger as I did. I must say it was... I don't know what to say because, I don't know, it's 20, 30 years ago.
How do you approach the Fed meeting? Does it affect anything you do as far as holding your short options?
You know what's very interesting about the Fed meetings? I've said this for so long, and it's very hard to stick with the actual words that you say when emotion gets involved. But let me just make it as simple as I can. I remember that when we used to talk about M1 money supply, It was a big deal. And then they spoke about M2, this is 1970s and 80s. And then all of a sudden, they introduced M3 as something that everybody was watching. I think it was a Thursday, and we would wait until noon or whatever it was, and then M3 would come out, and the market would do something or other. But if you've ever looked at charts, if you look at the charts of, I remember when I used to teach music at clarinet, in a music conservatory at down near Harvard Square. Whenever I had a break, I'd take a quick walk down to the square. It was usually, if it was summertime, it was fun. And I remember I went short with put options, the S&P or the XMI. I went short the market. I went for a walk, and I used to have a little handheld wireless thing that gave prices, but that was all I had. I was busy teaching. I was out of communication. I just had to put the trades on and see what happened. So I go short, and then I decide it was like 3 o'clock, and I take a walk, quick walk. I had a break. A student come with something like that, and I see on the sign there used to be a billboard that had the flashing news at Harvard Square in Cambridge, Mass. And it said, Reagan shot, something like that. Well, of course, I didn't say, woohoo, it was not the sort of thing you want to do, even though I had those puts, but I thought, wow, I wonder what, and the market dropped 15 points or something like that. Oh, geez, I thought, wow, maybe I'll make some money. By the next morning, the prices were all back again. If you look at when JFK was shot, it never changed the trend. Trends are major. That's why this is a really important moment. A trend doesn't change just because the Fed came out with news. It'll only exacerbate or continue whatever's going on. Or you might get a momentary turn. So if the Fed comes out and makes the market really nervous, and I must show you something very interesting here. If you go to the US, dollar US, this is the T-bonds. I'm expecting, it's a little easier to see in the TLT, that big spike of 127.68, my thinking has been, if we can go to 127.69, it makes it leg D in the weekly chart of the TLT, iShares Lehman 20-year Treasury Bond Trust, and it makes it leg D in the monthly chart. It extends the leg in the daily. The daily also would have been D. It would be like triple D if it goes to 127.68, especially if it does it in this move. That would be what I call in the Chapman wave methodology an overlapping wave, because you get to peak C, and then you have a major pullback, but you don't break underneath the starting point of 112.73. Instead, you stop at 118.21, and you start a brand new buy mode. So this is leg D, and it says that maybe tomorrow by 2 o'clock, somehow or other, we're at 126.36. We get to 127.69, and maybe bonds turn tomorrow for, I don't know, whatever reason, but at least we have some kind of a turn down tomorrow. So my answer to you is that I don't think the Fed can change the trend of the market right now. The selling is just being too intense, and we've got some major sectors that have been absolutely fantastic. And I can just tell you that we'll watch the VIX. So I had a question. Larry asked me, could I post a current VIX chart? So this VIX is in leg A in the daily chart. I'll talk about that in relation to the Fed and what I think might happen, if you don't mind. You want to hold on?
Sure, thank you.
Okay, and I'll talk about it on the parameters we need to look at with Robin Paramus. We've got the parameters and Paramus, and we'll be right back. Dow's down 100.
You take a hands-on approach to managing your investments. And whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
TFNN has just announced a special sale for the Gold Report for a limited time only. To celebrate the 660th weekly issue of Tom O'Brien's Gold Report, that's more than 12 years, TFNN is having a special one-time sale. Right now, you can receive 60 weeks of the Gold Report. That's 14 months for only $600. We're offering Tom O'Brien's dynamic weekly newsletter at only $10 a week, half off the regular monthly price. By taking advantage of this special offer, you also get a signed copy of Tom O'Brien's best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, an $88 value. The Gold Report is published every Tuesday and provides subscribers with Tom O'Brien's expert commentary on the industry, as well as detailed information on a variety of mining equities. This offer is valid for current or new subscribers, but is only good through this week and ends this Sunday, December 21st. Lock in the low rate of only $10 a week for the Gold Report by placing your order at the front page of TFNN.com today. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartley's, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
Folks, so we're back, and what we're looking at here is we're talking with Robin Paramus, and we're talking about the Fed. So let me put it this way. If the Fed does something, I don't even know what can they do. Are they going to raise rates right now? Could they really do that? I'm not sure. What did startle me, Rob, over the weekend when I looked at the RTH, the weekly chart, the Market Vectors Retail ETF, there was a spectacular move on Friday. And it's close to all-time highs. Well, if you try to go to a shopping mall, you'll know exactly why. Certainly here on the Northeast, it's just unbelievably packed. But look at this. The XRT, which is made up slightly differently, is starting to fail and shows a right shoulder failure potential. So this is what I'm going to say to you. I'm going to make it real easy. I don't know what the Fed can do, but what I said to subscribers over the weekend was, number one, we will see if the volatility index is being pressured because so many fund managers are long and they need to cover themselves, and the easiest way to do it is to buy the VIX, and that's why it's up. or whether we suddenly seen, it should have been today, with that move up in the early morning, that the VIX dropped sharply below at that point it was 16.93, I think, for the VIX index 9-period moving average. Now it's 17.80. So what I'm looking at is we need to see if the VIX tomorrow at 3 o'clock or 4 o'clock, going into tomorrow's Tuesday. Oh, it's Tuesday. I thought the Fed was Wednesdays. Anyway, by Wednesday, if the VIX has not plunged towards the 17 or 16 level, but instead is still holding here, the trend is decidedly down. We have confirmation. And if the Dow... So let me just quickly give parameters before we wrap up. So that's the answer to you. Is I don't think they're going to be able to change the trend. Trends don't change on a dime, and they don't change just by Fed speak. It seems to me that the Dow is trying to go to the 16,845 200-period exponential moving average as my second target. My first was 17,000, I think it was 780. And now the next one will be that 200-period moving average. For the S&P, and that's a question I had in an email right now, the holding short-term SPY puts, hesitant to hold overnight but don't wish to cut winners short. Could you please go over the SPY downside target for next 1 to 2 weeks? I'd rather say that I'll do more tomorrow, other than to say if this downtrend, which is accelerating, continues, and the SPY takes a SPY. Let me go to the SPY. It's a little easier. The SPY takes out 196.80, closes under 196. My target would be the 200-period moving average of 194.32 as the next target. And the weekly chart is for the first time breaking since the October run-up. It's the first time it's breaking support. This is serious stuff. So, Rob, I hope that helps you.
It helps a lot. Thanks very much.
Thank you very much. And now I'll just talk about upside potential. Let's just say there's a spark. If the VIX does fall, not enough, but it falls enough to make for a rally, 201 to 203, maybe 205 would be major resistance area. I would expect an H pattern to form right there on any rally. I don't think we're going to get a major rally at this particular point that can be sustained into year end. This is looking serious. And the Dow, the rally would be from 17,124 that we're at to 17,350. 17,400, but absolutely the 17,546 level is a 9-period moving average daily resistance, and I just don't think we're going to close above that in the next week, not at this particular point. Look at the IYT, that's the transports, pulling back very sharply. The XAL, which should be soaring right now, is down. That's the airline index. This is serious stuff. Folks, stay tuned to Larry Preservant. There should be a great show. He's got a wealth of material right there, I'm sure, ready to show us. I'll be back tomorrow. Check out the opening call. You might enjoy it. Thanks for being here.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This is TFNN.